Hey guys, and welcome back to Inside Investing, and today we're going to be discussing why we like investing in the Vanguard All World ETF, the VWRL, so much. And we're going to be discussing the most important topics, the most important aspects of this ETF. And that of course starts off with what is an ETF? Well, an ETF stands for Exchange Traded Fund, which means that it's a fund that's traded on an exchange. No shit. But why do we like investing in these ETFs so much? And that's because investing can be quite difficult and very time consuming. On average, I think that might be even more important, the average investor that buys specific separate companies has a very slow and very low performance. So they might, I would say, on average, lose more money than they invest, and that's not what we want. And that's why we really like to invest passively, really get some passive income going, and really invest in a broad variety of companies. That's why we like ETFs, especially for starting investors. If you're a starting investor, this might be the best solution for you. The ETF, so Exchange Traded Fund, because this really lowers the risk for you because you're investing in a lot of different companies, and we're going to show you actually which companies are included in this ETF that we like so much in a few minutes. So please hang on to that point. So guys, to keep it simple, Vanguard All World is a very popular ETF. It's, I would say, one of the most popular ETFs that I honestly know. It has very low cost, so it's very maximizing the profits that we get, but there's also a lot of companies included. I would say even more than 3,400 companies are included, and that's also why it has such a very good profit. Actually, if you're investing, we've been investing for quite a while now in VWRL, and we've seen some very significant profits, and we're going to show you how that actually looks like as well. So that's why we really like to invest in VWRL. But to be honest, it's long-term investing, guys. It's not for the short term. So no, we're not going to be rich in a few months or so. No, this is multiple years. I would say 10, 20 or 30 years. That's what we're talking about. But then at least know that in that period, yes, you can make a lot of money passively without doing too much. It should cost you, I would say, a few minutes every month. That's all you need to do. But this is indeed long-term investing. And then let's have a look at how VWRL has been performing. And we see that in this nice graph over here. It's currently being traded around 103 euros. And yes, this is in euros because we're in Europe. And then this is the maximum period of which we currently have the overview. So we see it started somewhere right there, just a little bit below 40, so I'm not sure, but I think it will be around 42 euros. Then we see a very steadily increase over the next couple of years, a little bit of a decrease again, but then coming back after a few years. And that's, I would say, the most important thing, guys. In the long term, we really see that this has been performing. Yes, there are some minor dips, and this is, I would say, not a minor but very a decent crash, but then afterwards it really picked up steam in just a year or so, guys. So that's very important. If you look at the long term, from somewhere in 2012 2013 until now, it was trading at around 45 euros. It's currently being traded over 100 euros. So yes, guys, there's a lot of money to be made. This is spreading in investing in a lot of different companies, and that's what you can really see very nice in this graph. So it's long-term investing. That's very important. And if you also want to start investing, guys, that's very important. Then please use our link down in the description to start investing using DEGIRO. We've been using DEGIRO for multiple years now, and we really like this platform. It's really easy to use. It has an English interface as well if you're focused, or if you want to have it in English or Italian or whatever you want. It's all available. So really start using DEGIRO today. It's a very nice and easy to use platform. But now you might be wondering what companies are actually included. And we see that these are the 10 biggest holdings, the 10 biggest companies included in one share of S&P of VWRL. And yes, these companies, if you buy them separately, for example, Apple, you would be paying a hefty price just to have one share. And that's why we really like VWRL, because we're buying one share of VWRL, and with that we're buying all of these companies. So we have a very small section, a very small portion of Apple if you buy one VWRL. So that's very nice. And only big companies, guys, that are included in the 10 biggest holdings, of course. So we see Apple, Microsoft, Google and Amazon, Facebook, Tesla. So guys, these are the companies that I would say, if I would be buying separate stocks, it would be of these companies. But now I'm buying into all of these. So that's why we really like investing into VWRL. And the more diversified we invest, the less risk we take. And that's very obvious, guys, but that's very important. The diversification of our portfolio is definitely what we really want to do in our portfolio. And that's also what we see if we look at the weighted exposure here. So we see around 23% of technology, financials, industrials, healthcare. So a lot of different sectors are actually included, similar to the countries that are included. So we see the US, we see Japan, the UK, China, France, Swiss, Canada. So a lot of different areas in the world are covered with one share of VWRL. And that's definitely what we want to do. But please don't forget, guys, this is investing in the long term. So you won't be financial independent in just a few months, of course. No, this is investing for multiple years. But if you invest for such a long period, then yes, it's possible to make quite a lot of money. And how do you actually start investing? Well, I would say, and we've covered that as well in our channel multiple times, please apply dollar cost averaging. We've made a whole separate video about that. So if you want to see that, then definitely watch that video on our channel. And we can quickly show you how that looks like. So this is dollar cost averaging. So you see, you buy it somewhere when the price is a little bit lower, and then again you buy it when it's a little bit higher. You buy in over there as well, you buy in there. So it's just investing, I would say, each and every month or 2 months, whatever you prefer. I would say each and every month you invest a standard, a default, a set amount of money in your portfolio. So let's say 150 euros every month. That's what you're investing. So every first of the month you're investing. So you're buying when it's a little bit lower, then it's a little bit higher, and then it's a little bit higher as well in comparison with the first price. But then on average, you have a nice dollar cost price. So on average, you have a nice price. And that's why we really say, well, just set a date each and every month and buy new shares on that specific date. Instead of, for example, waiting until the price drops, because you can't really time the market. That's not happening. What you want is really have more time in the market. You want your money as long as possible in the market. So if you haven't started investing, then please do so today. And we're now quickly going to show you a few examples using a compound interest calculator to show you why it's so important to invest in the long run. So for example, the initial deposit, I've entered 100, this is in dollars, guys, $100. Then we see a monthly contribution. Let's start off with 100 euros for investment time span of around 30 years with an annual rate of return of around 8%. And then we see, if we look at how much money we would have made in 30 years, that's a lot of money, guys. That's 100K we've earned with a principal around 36,000 euros. So we nearly made triple the amount of money with the interest that we've gotten in comparison with the money that we've invested in our portfolio. So if you would, this is honestly insane, guys. So there's so much money that you can make if you're able to invest in a very long period in the market. So that's why we really say, please start investing as soon as possible. Just start out with a small amount of money. You see, $100 will still set you up quite nicely, I would say, with $137,000 in around 30 years. But let's see if we up this price a little bit. So let's see, not that much, that's a bit much, with let's say 300 euros. And then we see, of course, a lot of more money is now being made. So we've invested around $108,000, and the interest would then be $300,000. So that's already 3 times more. We've tripled the money that we've invested. And that's around 300K, guys. So that's a lot of money just by investing $300 a month. Of course, it's a lot of money, But yeah, then in the end you also have nearly $500,000 being able to spend that or save it for a longer period, right? If you were able to up this time spent for a little bit longer period, then that's even nicer. And for the last example, I would say, let's say $500. Then we see that the total interest would be $500,000 and we would have invested around $180,000. Of course, this is quite some money. Honestly, investing $500 is quite significant, but yes, then you're making in 30 years a lot of money, guys. So that's it for today. We hope you like this one. If you've got any questions, please drop them down below in the comments. If you've got any suggestions, for example, on the new video, then definitely also leave them down in the comment. We've got a lot of good topics coming your way. So please give this video a thumbs up as well. Subscribe if you haven't done so already, and we'll see you in the next one, guys. Let's go.